In this video, I'll discuss Q1 FY26 result and Concall of SBFC Finance. So, SBFC Finance is an NBFC. They are operating in the MSME lending space. 85% of their AUM comes from the MSME lending, and then another 15% of their AUM comes from the gold loans. Okay, so if I talk about their portfolio, their whole portfolio is 100% secured through property and gold. And if I talk about the geography, they are present in 16 states. So they are fairly diversified. Their main states are like UP, Karnataka, Maharashtra. So that is their geography. They are fairly diversified across the country. So that is the point. And then if I talk about their average ticket size is around 10 lakh rupees. So they are mainly catering to the lower middle segment. Okay, so that is the point. In terms of their result in Q1 FY26, so in terms of AUM, they grew their AUM by 30% in this quarter. Quarter on quarter growth was 7%, which is in line with their guidance. They always have been giving a guidance of like 5 to 7% growth quarter on quarter. So they are in line with their guidance, and they are also doing according to their guidance. So that is the point with AUM. In terms of the disbursement, in this quarter they grew their disbursement by 51% year on year to a level of 800 crores, which is a really good kind of a growth in terms of the disbursement. Okay, because if we look at their AUM guidance, that is around what, year on year 25 to 30% of growth they are looking for. Because if we annualize the 5 to 7% quarter on quarter growth, then it comes out to be around 25-28%. Okay, so to grow the AUM at 25%, they need around 20% of disbursement growth, which they are doing. So in terms of disbursement also, they are doing relatively good work. In terms of the asset quality, which is the most important thing now, because if we look at their result and if we look at the industry wide result, in terms of asset quality, all the NBFCs are reporting some kind of deterioration in terms of quality of asset, whether it is housing finance, whether it is NBFC finance, whether it is banks. So that is a industry wide problem. And if we look at SBFC also, in this quarter all the parameters have gone up, like 1 plus DPD increased by 100 bps quarter on quarter. So in terms of 1 plus DPD, that is a really bad kind of growth. 100 bps quarter on quarter increase is pretty high. Year on year also, if we look at year on year increase, that is at 175 bps, which is pretty high if we look at the increase. And in terms of credit cost also, credit cost increased by 25 bps year on year. Till last quarter they are giving a guidance of 90 to 110 bps of credit cost. In this quarter they registered a credit cost of 111 bps. So they are at their upper range of their guidance. So that is not a good thing for a NBFC, that if their guidance is like 110 bps, they are at 111 bps. And in terms of guidance also, that is not good. They are saying that in next 3 quarters the credit cost could go up to like 125, 130 level. That is not a good thing, obviously, but it is a industry wide problem that every NBFC is mostly reporting that kind of asset quality. In terms of GNPA also, GNPA increased by 18 bps year on year. So that is the point of asset quality. And if I talk about why are the why are the MSMEs not able to pay their EMIs, the management discussed about it, that because it is like because in the last 1 year, if we look at the microfinance segment, because of deterioration of asset quality in microfinance segment, the lenders stop their disbursement. Like they really bring down their disbursement, and all kind of like RBI came into the picture. Then they imposed the guardrails and all. So because the microfinance tragedy happened in the last 1 year, like take an example that if a person who is getting microfinance loans easily, they can go to a shop, they can buy anything they want. I mean, the money flows like this because anyone's expense, like he is doing the expense and other is generating the income. So anyone's expense is other incomes. So that is the point. And because the flow of money in microfinance segment has been, I mean, stopped in the last 1 year. That is why those who are getting microfinance loans easily, and they were able to spend it to anywhere they want. In the last 1 year, they have not been getting the microfinance loan, and then they have to cut down their expenses. They can't go and buy anything they want. So that is what is happening, because anyone's expense is others income. So the expense is getting lower in that pyramid, in that lower part of their pyramid. So the income of the NBFs, income of the MSMEs are going down. Like if we look at SBFC's loan book, whom they are giving the loans, mainly the service related customers. Okay, so if the customers is not able to pay for the services, how the servicemen will generate income for themselves. So that is why the whole increase in DPD buckets, increase in GNPA credit costs happened in the last quarter. So that is what the management is saying. So that is the point. And if I talk about the ticket size wise problem, the management is saying that upward 50 lakh ticket size, there is no problem. The repayments are good, the credit quality is good, upward 50 lakh ticket size. But when we come down the ticket size, like in 10 to 50 lakh range of ticket size, in last 1 year, the asset quality deteriorated by around 10 bps in last 1 year. Whereas if we come more down the line, like less than 10 lakh, we can see a deterioration of 70 bps in terms of the asset quality, in terms of the NPA. So if we going down the line, the problem is more and more. So that is what the management is saying. And if we look at SBFC's ticket size, that is at around 10 lakh rupees. So as the management also saying that less than 10 lakh rupees ticket size, there has been 70 bps increase in terms of the asset quality. Okay, so deterioration of asset quality is there more. So that is why SBFC is struggling in terms of the asset quality. So that is the point. And guidance wise, as I said in the credit cost, they are expecting another 15 basis point of increase in terms of the credit cost, and which is not good, because if the credit cost is going up, then obviously your bottom line will be like little will be in pressure in terms of the growth. Okay, so that is the point with asset quality. In terms of spread, they are doing really good work, because for last 1 year in last 4 or 5 quarters, they have been increasing their spread consistently. So if we look at their past, in Q4 FY24, their spread was at 8.3%, and now they increased their spread to around 8.7%. So in last 5-6 quarters, they have been able to increase their credit cost by 40-50 bps. So sorry, not credit cost, spread. They have been able to increase their spread by 40-50 bps in last 5-6 quarters. So that is the point with spread. In terms of the, and one another thing which the management is expecting, that as RBI decrease their interest rate, that is why their incremental borrowings they are getting the incremental borrowings at a lower price, and also their MCLR rate is going to decrease in some months. So overall, in terms of the cost of borrowings also, they will get a good kind of a leverage. Okay, that is why we can expect the spread to be like continue in this kind of a trajectory for next 1 year, because as the cost of borrowings lowers, then the spread obviously will be better. So that is another point. In terms of the Opex to AUM, they are consistently improving their Opex to AUM. Like in the last year, they improved their Opex to AUM by 50 bps, and the guidance is in the similar kind of range, that in this year FY26 they will improve their Opex to AUM by 50 bps. So that is another point, that they are able to control their cost. So that is the point. In terms of the branch expansion, in this quarter they opened 10 branches. Okay, and their guidance for the FY26 is around 20 to 25 kind of a branch. So if we look at their branch expansion, they are going at a good rate, because 20 to 25 branch in a year, and they opened 10 branch already. So that is the point with branch expansion also. In terms of the ROE, that is also going in a right direction. If we look at their ROE, in this quarter they reported a ROE of I think it is at I think it is at 3.6 level, if I am not 13.6 level, if I am not really wrong. So if we look at their trajectory of ROE, then 1 year earlier, if we look at FY24, they were at 11% ROE, and they improved their ROE by 2.5% in 2 years. So that is a really good thing. Not really 2 years, but it is like they improved their ROE by 250 bps in like 5-6 quarter. So in terms of ROE also, their ROE is going in a right direction. And what is their guidance about ROE? They are saying that they will reach around 4.2x ROA in next 2 years, means that FY27, and by that time their leverage will be around 4x. So we can expect over 16% ROE in next 2 years. So if we look at their increase, like they are targeting another 300 bps increase in terms of the ROE in next 2 years. So that is the thing they are targeting. So in terms of ROE, there is no problem because mainly driven by the Opex, mainly driven by the spread. So that is the point with ROE. Okay. In terms of PAT, in this quarter they grew their PAT by 28%. They crossed 100 crore PAT for the first time in their history. So in terms of PAT also, they are doing good job. Obviously they are not getting the operating leverage because of the credit cost which has gone up in the last one quarter. So that is the point with the PAT. In terms of the tailwind and headwind, the management is saying for their company, the first headwind is they are saying that the credit cost will be the main headwind for them, but there are like 2-3 tailwinds. Like one is the regulatory thing, that the RBI is more like softer now in terms of the growth of the economy. So that is why RBI is also allowing the liquidity from the NBFCs, banks. So that is one tailwind. The second tailwind is the cost of borrowings, because of RBI's rate cut, the cost of borrowings, incremental cost of borrowings has gone down in the last 2 months. So that is another tailwind they are getting. In terms of their operations, cost of operation also they are getting the tailwind because they are expecting a 50 bps Opex to AUM improvement in next 1 year. So there are few tailwinds, and there is mainly one headwind, which is credit cost, and which is the most important, because if the credit cost went up in if the credit cost goes up in the next few quarters, so because as we know that NBFC is a game of asset quality. Okay, if the asset quality is good, then they can grow at any level. Okay, but if the asset quality is not good and going in the wrong direction, then we know what happens. Okay, and the management is also saying that that 1 quarter of bad result, 1 quarter of damage, we can repair. We need another 4 quarter to repair that 1 quarter's damage. So that is what with NBFC is, and we can see it across the components, that 1 quarter of bad asset quality, 1 quarter of bad result, the NBFC is gone for next 1 year, 2 year. So that is what happens in the NBFC, in the banking. So that is why we have to be very careful in terms of the NBFC businesses, because we have to look at the credit cost, the asset quality very closely. We have to. That is the main point with the NBFC. And in terms of India's economy also, the management said gave a very good words, that what are the headwinds and what are the tailwinds for Indian economy. The main tailwind is the monsoon. The monsoon is pretty good in this year. There have been very good monsoon throughout last 2 months. So that is one tailwind India is having now, because of the monsoon, the rural economy is doing much better than the urban economy. But the headwinds is like the stagnation in income and the job creation in the urban India. So that is the headwind India is facing. So in terms of the rural India is doing pretty good, because the monsoon has been really good in this year. But in terms of the if we look at urban India, that is struggling in terms of the growth. So that is what the management is saying about India's economy. So I do not think I left anything. So yeah, as a business, if I talk about as a business as a whole, the main thing we have to look at the asset quality for now, for next 2 quarters, that where the asset quality is going, and that is the most important thing I have to say for SBFC Finance. I think in this cases of NBFC, what I am doing, like I am not adding anything in any NBFCs in this quarter. I am not giving any buy and sell recommendation, but you have to understand the game. So what I am doing, that I am not adding any money to any NBFC, because there is a little uncertainty in terms of the asset quality, whether it is home finance, whether it is MSME finance, whether it is banks, all are facing the asset quality issue. So I am not willing to add money because of that. So that is the point. Keep the check on in terms of the asset quality for every NBFC. Keep the keep hearing the management's call. So that is the point I would like to say. So that's it for the video. Thanks for watching.